I'm all in on AI. We just talked about the ability to productize knowledge is something that is a massive opportunity, and how we use generative AI today is going to be relatively insignificant versus how we're going to use general intelligence in the future. And so I think all companies still think third inning of a 3 to 5 year bull market, and that's going to end in a spectacular bubble burst.
All right, welcome to OK Computer. I am Dan Nathan, joined by Gene Munster. He is the managing partner of Deepwater Asset Management. Gene, welcome back to the pod.
Is one of the highlights of my year joining you here 4 times a year.
You were too gracious, and like you said, 4 times a year, which gotta make you the most frequent guest on OK Computer, and I really appreciate that. I think.
Wow, that is an honor. Appreciate that.
Well, I mean, listen, Gene, and we've been talking about this for a while. I mean, the fact that you come on, you give us so much of your time, and we preview really the Mag 7. We're gonna leave NVIDIA out of this one because they don't report for another month or so. So we're going to hit the sumptuous 6 or something like that, or the superb 6 or something like that. But again, we hope to hit a little bit of the AI hype cycle where you think it is. We'll put some context around the last week or so's sell-off and today's bounce. We're recording this on Monday afternoon, and we have the NASDAQ sort of ripping here, but we have a lot of the hard-hit names from last week in the semiconductor space, really outperforming. Google's up nearly 3% or so. So we'll talk a little bit about that price action. But Gene, how are you feeling overall, about just the sentiment around tech heading into mega cap earnings this week? Because it seems like it was just a bottom left, upper right for most of this year. We did have that little sell-off in April. It was about 6% or so. Some of the big names, sold off a bit more than that. And now here we are. We were just down a few percent in the S&P 500. And a bunch of those names were down 7, 8, 9%. It felt like we were just getting started on something.
Yeah, I mean, psychologically, statistically, we're due for a pullback. So I think there's kind of the mechanics of the market, some of the emotion of the market piece. And I think that generally, I'm not expecting a surge in these stocks around earnings. I think that things will be in check. I do think we will, as we normally do, we can talk about some of the numbers, get these pullbacks. A 4, 5, 6% pullback's not what we're talking about. It really needs to be like a 10% plus kind of a pullback in the market just to kind of reset expectations. So to answer your question, I think that the most of the superb 6 that we're talking about here, I think that they're the themes, most importantly, about what they're pursuing in 25 and 26. I think they're going to be locked in step and in place. And I think investors will largely sleep well after these earnings. Who knows how it's going to trade on the actual print, but I think that everything that these companies are doing, I think as indications are, that will be moving in the right direction once we kind of look back holistically on the June quarter.
Yeah. And there's some things I think to keep an eye out for as we look at this group in general and kind of think about what you need to hear about CapEx, about revenue growth, about, really declining margins possibly because of that CapEx. And we'll get into that with some of the individual names. It's worth noting though, Gene, that the NASDAQ composite is up about 20% on the year. The NASDAQ 100 is up a little less, 18%. And one of the reasons that could be, and the S&P is up nearly 17%. When you think about this group of stocks, Microsoft's up 17.5% on the year, so in line basically with the S&P. Meta's up a lot more, but Apple's up 17%, Amazon's up 18%, and Tesla's only up 5%. So some of these big names are just keeping pace with the S&P 500, but they're a disproportionate amount of the expected earnings growth in the sector. How do you kind of square that circle a little bit?
Well, I was looking at more just what's the view over the last few months, the last 3 months specifically, since these companies reported their last quarter. And the NASDAQ's up, call it 16% since then. If you look at the Mag 7, they're up about 28%. So they have gained relative momentum over that period. And I think part of the reason that the square up on this is just I think the reality, there's 2 forces in play here. Force number 1 is interest rates. That's a well-traveled road. And we saw some lift on that, which I think gave some encouragement to some of these smaller companies that they can they can perform well, outperform some of the mega caps. So think of that when I think of all the weightings here. I think interest rates are 10, 15, 20% type of weight on how these are moving. It's been in favor of these smaller stocks recently. But ultimately, I think this comes down to AI. I think that's going to be the much bigger lever here down the road.
All right, let's hit some of these names because we get going on the mega cap tech earnings Tuesday night after the close. Google is set to report. That would be the Alphabet, up 30% on the year. The implied move in the options market, Gene, is about 5.5% in either direction. Over the last 4 quarters, the stock has moved about 8% or so. So there's been, and some of those moves, they've gone back and forth, up 10, down 10, that sort of thing. It's been a very volatile stock of late, despite being lower left, upper right, as you just described, that 28% outperformance. A lot of the gains in most of these stocks, have come, let's call it, in the last few months or so. When I think about this name, you often hear about this kind of bifurcation with some of them where some of the multiples are very reasonable, especially relative to growth. Google is one of them, trades about 24 times expected EPS growth this year of 34%. Next year, 21 times expected EPS growth of 14%. But this is where it gets very interesting for me, and I'd love to hear how you think this shakes out. Gross margins are expected to decline this year from about 68% to possibly 62% next year. A lot of that has to do with that CapEx guy. So thoughts on Google headed into print, maybe valuation, maybe what happens to that gross margin line, because again, if they don't guide, if they don't give analysts reason to believe it's going to be low 60s, next year, I mean, the stock is probably pretty cheap, even at 24 this year and 21 times next.
So in our flagship Titan fund, we own Google. We think this is the best position of all the AI companies. And I think that this will come through. I think this is going to be the general takeaway from the call. Is first, they're the only ones that have a primary large language model. Second, they're the only one that is doing advanced silicon with their TPUs. And last is they're the only one that has products that have reach. They have 6 products that have 1 billion or more daily active users. That combination is unique. And then you put on top of that where valuation is. I think this is still a compelling valuation. I think the story will continue to strengthen. So that is what I would say the long-term investors, how they're going to, I think, generally conclude here. Then there's like the nuances around the long term as well, which is going to be an important topic. And that, of course, is how generative AI is impacting their search business. And since they announced their last quarter, now they are starting, I'm sure many of you are starting to see these generative results when you just go to Google proper or to your Google search bar, you're starting to see those pop up 1 out of every maybe 3 searches. And so that dynamic, how that's impacting advertising revenue, I think that's going to have a large impact as they talk about that on how the stock trades after. The last quarter, they said that through all their testing that they saw that it being neutral to positive. And so now we're in a much different scale, thousands of times more scale here. So that's where my head's on, that margin piece, critical under any circumstances. This is what is the lifeblood of what these stocks do. But in the case of what we have with Google and how well positioned they are with AI, I think the margin conversation kind of gets kicked down the road because investors will generally give them a little bit more time to get to where they need to go with margins. Yeah,
but the important part there is that it's analysts, it's consensus that is basically, I mean, they haven't guided for 2025 with margins. So again, the expectations are very low for that, which I do think is interesting, and the likelihood that you see a 10% drop.
Right.
When's the last time you've seen one of these mega caps in the last 5 to 10 years see a 10% drop, other than Tesla? But yeah,
never.
No, I mean, but Teslas have come down pretty considerably, actually.
Yeah,
so
from 30 to 16.
Yeah, so they've been cut in half, and that's a pretty unique situation. But you just mentioned, Gemini within Google search and what that means for advertising. And I think you were trying to take away something positive, but it's interesting because, all of a sudden within the last month or two, when you put a search into Google, you're starting to get something that looks like a Chat GPT result. And so I wonder, though, what does that mean for the blue links? What does it mean for advertisers who are getting a contextual answer and then any links are well below, or they're just cited within the context? And a lot of people, I don't think, are clicking through to the citing of the articles. And I'm just curious, is this going to be a positive or a big negative in the near term?
Well, in the near term, they're saying, at least based on the testing 3 months ago, they said that that dynamic, which is a very real dynamic of the links going away, that dynamic has been neutral to positive in their testing. We're going to hear more about that. In theory, this should have a big negative impact on Google, and that's why the stock took so long to start to perform well, is that investors were just concerned about, what's life after 10 blue links. And what they have said is that they're going to find ways to monetize and monetize these generative results. And I suspect that eventually there'll be sponsored generative results. And that may seem like a contradiction to the power of AI. You just want the right answer. But there are times when the right answer, the one that's best for the consumer, they can show that answer and also find a way to create conversion around it. And so to answer your question, I think that it's still an unknown about how they navigate through the blue links, but there's so much increase in engagement. I think that they will figure it out. And that's about as good as we have today. I would just add one other piece. The biggest risk to Google is that eventually OpenAI comes out with a search project, which they will do this year. They're going to have their own search engine this year. OpenAI comes out with their own search, and then all of a sudden people just start to vacate their time from Google and go to OpenAI. And in our recent testing, we tested the 4 models on their basic intelligence. I'll just cut to the punchline. They're about the same intelligence, and Google ends up doing better with commerce. And so since the generative experience is pretty close right now between Gemini and ChatGPT, I don't think it's 10 times better, which is going to get people to make that switch. In other words, Google is staying par with the quality of the product. And I think that because they're going to maintain that engagement, they'll figure out how to navigate beyond those 10 blue links.
Yeah, no doubt. This seems to be one, like, you own it, but you'd be a buyer on pullbacks, and especially if it's just a general market pullback, and just kind of putting a pin on that market conversation. On average, there's always a 10% or so peak to trough decline in the S&P 500. We have not had one in a very long time. And when you think about, the VIX and where it was, I think it got below like 13. Here we are around 15. We have not had a down 2% day, Gene, in the S&P 500 in more than 400 days, right? So again, maybe this is lining up a little bit like last July into October. I'd be shocked if it goes peak to trough, you know what I mean? Like more than 10% over a 3-month period. But again, none of us know what's in the offing here. And you just mentioned interest rates. I think it's important to note, with what just happened with the Democratic, kind of ticket changing up, maybe they push out the September cut of 25 basis points, which the Fed funds models were pricing in a near certainty or so. So who knows? I mean, again, because that would cause rates on the short end probably to go up a little bit, but that's not what tech stocks are trading off of either.
It's not. And at the risk of jumping around, I do want to add on to something that you said related to the market pullbacks, is that those statement of fact you just gave, we haven't had really a downtrend in the market. If we look back from 94 to 99, that's a 6-year period. The NASDAQ traded off during that period 11 times by more than 10%, on average down 14%. The max was down 26% in 1998. And so these are material pullbacks that you had during this bubble, 6-year bubble, material pullbacks. We really haven't seen a material pullback. That 10% threshold hasn't hit since the AI train left in January of 23. And so I just want to brace investors. We're going to get a pullback, and it doesn't mean that it's over.
Yeah, no, that's great context too. And, during that period you just mentioned, from 95 to 99, the S&P 500 on average gained about 30% plus during that time period. So you could have big pullbacks that look like bear markets, and they didn't last long, because again, it was long-term capital. There was the Asian currency crisis and this, that, or whatever. I mean, it seems like an age ago, but those things were causing some major volatility. Well, speaking of major volatility, let's move on to Tesla here, because this company also reports tomorrow after the close. And again, this stock had, from its April lows, nearly a 90% rally into the recent highs. I don't think anyone expected that sort of comeback, if you will. Stock is now up 5% on the year. Implied move into the print is about 8%, which seems kind of, I don't know, it doesn't seem particularly meaty, especially when you consider the stock on average has moved about 8.25% or so. I guess valuation really doesn't matter a whole heck of a lot. Trades at about 100 times 2024 EPS, which is expected to grow 19%. I just want to make one point here, which is really interesting. If you go back and look at 2023 earnings, it was about $3.12 or so. Expected to be down this year 19%, but expected to kind of have a big rally off of that number, but only to $3.32. So if you think about what we've gone from 2023 to expectations from 2025, right? We don't have a huge EPS ramp here. So trading at 100 times this year and 70 some times next, don't you think we're going to have a meaningful earnings bump from here, which would obviously coincide with margins bottoming out and getting back towards 20% plus?
I think the stock is trading on this potential, the hope around what these new 2 or 3 models, I think it's going to be 3 models in October. Maybe they end up not even being announced. Maybe the event gets pushed to December. Who knows? But these 3 models, then ultimately what it could mean for FSD and other revenue streams. And this is kind of a unique period for Tesla. Typically going into this, the first topic we're going to discuss is automotive gross margins X credits. That's still going to get some play. Last quarter was 16.4%. In the June quarter, it's supposed to tick up based on the FactSet numbers to 16.9%. But I think that that focus on like near-term profitability, I think is taking backseat to the potential around, again, these vehicles, FSD, and even the toy department related to Optimus Prime. And so the valuation, there's no logic around it. The logic is related to what the potential is in probably year like 26 or 27. And I think it's just a very unique environment. If deliveries, I don't think it's much about profitability. If deliveries, if they said, let me take a step back, that in the March quarter, the revenue deliveries are down about 9%, similar revenue. This June quarter, revenue will probably be down about 3%. If Elon says that business will be down again in the September quarter, then the stock probably trades off. But if they can just continue to show improving revenue growth quarter on quarter and keep talking about the dream, I think that this stock continues to move higher. I do own it in my personal account. I think that this is one that it's just very few companies have all these pieces together on where I think ultimately the world is going.
Yeah, well, I mean, expectations for revenue growth year over year is down 1%. So the bar of kind of beating that is probably not that high when you think about it, especially.
They got to beat it.
Yeah, they got to beat it. But, the comps get kind of harder, Gene, in the back half of the year. Expected 9% earnings growth, 9% sales growth and 8% for Q4. And I just think about some of the things that some investors are looking forward to. You already had this robotaxi event pushed out. I don't think that's coming anytime soon. Not the event, the actual robotaxis on the street. I think Waymo is so far ahead of them. I think the scrapping of the low end, $25,000 car, again, is, I think that's probably a big mistake. And then when you think about what Trump or former President Trump said at the RNC last week about EV subsidies, I mean, I just don't know how this company is going to compete in this current price war, especially with some of these low-end Chinese EVs without a low-end offering. You know what I mean? I just think the price war remains. And then the other things that you mentioned, Optimus, humanoids, full self-driving. I mean, the list goes on. And I just bring you back to, the diversion of how many H100s from NVIDIA did they send from Tesla over to XAI? I mean, that means to me that if you think about their cars, their full self-driving that does not rely on LiDAR, right? But it relies on like some heavy compute. Well, why the hell couldn't they use those H100s? You know what I mean? Like, so to me, I just, I don't expect a lot of that other stuff that this stock is trading off of to happen anytime soon. So again, that's me. I'm been particularly bearish on the name for a long time, and I, can be right and I can be very wrong, especially when you get a 90% rally in 2 months or so. But to me, I want to fade, Elon right now. And I'll tell you two reasons why. I think what he did with X, Twitter, whatever, it's one of the worst trades that I've ever seen in M&A in such a short period of time. And maybe he gets that going in the right direction. And then the other one is like this miss, and you and I have talked about this, on this belief that there's price elasticity in this thing. They lower prices, greater demand. That has not materialized over the last year and a half. So again, there's the bear case. You laid out the bull case. Who knows who's going to be right here?
Okay, I guess I'm asking for final word here. Respectfully asking for that. I do think they are going to have 3 vehicles. I think they will still do the low end one. We'll see what happens on that front. And so I think that's one to keep in mind. And the H100s, they redirect them. There was a part of the factory that wasn't done in Austin, so they kind of redirect them. But still, there's definitely moving parts around it. And one piece that I want to make sure that I'm very clear about here is next year, the street's looking for, I'm going to look at the numbers for growth to accelerate to 20 or 18% for calendar 25.
Yep.
That, who knows, that number could be up 1%. It could be up 40%. It all depends on the timing of these vehicles. That's the thing that can be two things that can be most focused in on tomorrow. What Elon says about his ambitions in politics, and second, when do actually these new vehicles start to generate meaningful revenue? Very different than actually rolling off the factory floor.
Yeah, and you're not going to get the last word here because I'm going to step in for a second. I mean, listen, what you've been covering this company for pre-IPO, and when has he ever delivered on a timeline? He never, ever has.
Never does.
No,
I agree. That's why he had said in the last call, early 25 or maybe even 24, some of these new vehicles coming out. And so my thought is we may not see any really volume until 26 on some of these.
Yeah. No. Well, again, we'll see. I mean, he's the master of kind of pushing out, this quarter to next quarter and that sort of thing, which keeps investors engaged enough. But, I'll just say this, that, with what he's done politically, have you seen the market share data as it relates to California? It is just absolutely plummeting. And I think for the first time ever in the U.S., they went below 50% market share for EVs. So again, I would kind of take the other side on when these new vehicles that we don't even know about start to kind of potentially add to that 18% expected revenue growth. But again, I'm going to give you the last word on the next one, because I want to jump now to Microsoft, which is going to report in a week from tomorrow. Okay, that's July 30th. It's up 17.5%, as we said, in line with basically the S&P 500. The implied move here is about 4.5%. The average move is just below 3%. And this one, getting a little expensive. Trades about 33 times next versus expected EPS growth of about 15 times, and then mid-teens expected sales growth this and next, with pretty flat-ish margins around 70%. Thoughts on Microsoft here, because until Google just got back on its horse, this was kind of a runaway train as far as generative AI and their kind of reliance, I guess, on OpenAI.
Yeah, we're early to the party, but I don't think they're going to be the star of the party. And I think that what we've seen in the past 6 months is that they're clearly have benefits. Azure's seen reacceleration and growth, 30% in December, 31% in March. It's probably going to accelerate again. So that's a great business. People are going to focus on the Azure number. But outside of that, when you think about their what's going on with Copilot and Windows, that's a real benefit, a real upsell. That's the software piece. That's going to take a couple of years to get some momentum from that. And ultimately, I'm still struggling with, does Microsoft have control of their AI destiny? This relationship that they have with OpenAI, I think it's oftentimes misunderstood. I think they have rights to 49% of a certain revenue stream. They do not have 49% of equity. And even if they did have 45% of equity, that's not 50 or 51. And so I think that they've talked about doing more of these models themselves. And so I think this is a great company. It's a steady growing company, but I think there are more exciting investments to make around AI.
Yeah. And then again, on valuation, does it matter? I mean, we know it's not a timing tool or whatever, but at 37 times this year and 33 times next, I mean, these are kind of historically high valuations. We got to go back to the .com bubble. And, I'm just curious how you think about that.
I think there are just better places to be. And like the .com bubble, those valuations were 100x. They're like Tesla type of valuations. And so I think that I don't anticipate Microsoft to get cracked here. I think they're still in a great place. I think that the valuation does kind of put it at a range that's just not that exciting.
Yeah. I don't know if you caught this, but so a reporter for the Information sat down with a guy named Bill Braun. He's the CIO over at Chevron, which is a very large integrated oil company. They were talking about generative AI, and they started a group last summer, okay, and they're looking to build some applications on top of Copilot. And his reaction to all the spend and some of the efforts that they placed here, this is a quote, and we'll put it in the show notes. We're a little dissatisfied with our ability to know how well it's working. We have to survey employees a lot, which isn't our favorite thing to do, but we're giving Microsoft a lot of feedback, and they're trying to help figure out because they know they need to. So I thought this was really interesting. So the rest of the article just didn't seem like he's that geeked up about what they're doing right now. And again, if they're testing on top of Copilot, they're probably not spending a lot of money on it too right now, because I'm sure there's kind of some deals that Microsoft is stealing from Peter to kind of pay Paul a little bit. And so again, you just mentioned Azure growth. It better be there, because that would indicate that a lot of their enterprise customers are not doing the sorts of things that Chevron just described.
It's going to come down to Azure growth. If Azure is a good number, stock's going higher.
Yeah.
And if not, the opposite.
Yeah, no doubt about that. Okay, moving along here. On July 31st, we have Meta. It's up 38% of the year. Implied move in the options market is about 8.5%. The stock has moved on average about 10%. Here's another one that kind of falls in that Google category as it relates to valuation trades. About 24 times expected EPS growth, which are expected to grow 39% this year and 21 times next. Versus EPS expected to be about 15%, 18% revenue growth this year. Gross margins expected to remain around 81%. I think it's the high in this whole group. So I know this is a name you've liked an awful lot. The outperformance is notable. I keep hearing about the investments that they're making on Meta AI to integrate. You just mentioned with Google how many platforms they have above $1 billion. If you just think about Instagram and WhatsApp and the Blue Page, I mean, there's a lot going on there with a third of the planet on their products, monthly active users, I guess you call them.
Right on. And that number is growing nicely in the March quarter. That DAP, the daily active people, this metric, like you said, it's about a third of the people in the world, call it 3.2 billion people. That was up about 7% year over year in the month of March. It was up 8% year over year in the December 23 quarter. So a slight deceleration, but these are massive numbers and they're still growing, which is remarkable. And so that's at the, I talked about Google. We also own Meta in our Titan fund, and I mentioned Google being the best position. Meta's not as good position, but they still got a great position because they have distribution. And also they've got a way to really quickly build AI into the fabric of their products. We can go through all the products, but I think it's my takeaway is they can put that in. And last, you still have Llama. And Llama is, that's not very smart right now. Based on our testing, CNBC recently did some tests, and they had to sit down for some medical tests for if you're a doctor trying to get your certification, and it came in like it got like a D plus versus the other models. If you're curious, GPT got 98% of the test right. A passing grade on this test, this is CNBC's work, a passing grade on the test for humans is 60% or better. So actually Llama passed. It was called Hugging, I forget which was the actual name of the model that was being used. But my point is, Llama still has a long way to go, but it's a real opportunity for Meta. They eventually, I think, can create type of an AWS type of business, turn it into a pay-for model once they get that magical 1 billion plus users.
Yeah, and the question I have for you is that, like, Llama is meant to be open source, and so at the end of the day, do they need, maybe they do something like Apple. Why screw around and get so far behind some of these other things and just kind of license the technology? Because it's only going to get cheaper, especially as there's more competition. You saw that number from Crunchbase last week. There was $24 billion just in Q1 in the private markets invested in AI startups. You know what I mean? And there's likely to be a couple more upstarts, right? And maybe you get in early. We know that, Amazon and Google were tripping over each other, earlier this year to invest in Anthropic, and that's Claude. So again, it'll be really interesting to see if we see more licensing deals, because Apple, and we're going to get to that in a second, not only did they say they're working with OpenAI, but they also opened the door for working with Google Gemini, and that could be others.
Right.
And maybe it looks more like a Perplexity, which ends up being a wrapper for lots of these LLMs.
I think all that's true. I think there's a lot of different avenues that it can take. I still think we're early. We can talk about AI more broadly, but they've got a few avenues that Meta could actually pursue. And there's one avenue that has been a black eye, which I want to just quickly cover, related to Reality Labs.
Mm-hmm.
And that, of course, they're losing like $15 billion a year. I mean, massive amounts of money being lost. I think that there's a misperception about what they're doing there. And specifically is this view that this is a Quest type of a product where you are kind of a more immersive, a heavier type of device, and that's where they ultimately want to play. The information just reported that they're having some cuts in their Reality Labs business. And I just want to quickly put that into context. I think their real objective is to do something like Astra. This is Google's lens, and that they showed back in May at Google Dev Day. But this is related, when you think about Meta, more of this ambient computing, more glasses type of style, uses computer vision to take in the world around you, can use holograms to put things in your field of view. But it's going to take many years to get there. But I just want to be on the record. I think this is the right move for them. I've in the past been very negative on their spend in this group, but I think I'm developing a little better understanding of what they're trying to accomplish there, and I think they're on the right path.
All right, let's move to this one. This would be Apple, and I got to do a little mea culpa. So this was June 10th. WWDC had just ended. The stock, Apple, closed down 2% that day. I made a very definitive sort of statement without being at WWDC by saying that I don't think anybody's going to upgrade for what they just detailed about Apple Intelligence. Because to me, I just didn't think it's something that is going to be, that it's going to be rolled out a little bit, like piece by piece, right? And we also know that whenever Apple has done any of these big software launches, they've been pretty glitchy right out of the gate, right? And we can go back and think of a lot of those things. So to me, I know that there's a lot of data out there that there's probably 200-300 million iPhones that need to be upgraded. But I've heard this again and again about the upgrade cycle that's coming in Apple. And if you just think of expected growth here, you'd say, well, the expectations are really low, right? When you think about single-digit earnings and sales growth expected. But the stock, after the move it's made, and this is where the mea culpa comes. You came on Fast Money right after I said all that, and you said you think it's going to be massive. You think the opportunity is going to be massive. You didn't say that it's going to happen in the fall of 2024 or anything like that. And then I came back on and I said, Gene, I'm going to give you an opportunity to reword that thing. And then the stock just took off the next day, and then it gapped up the day after that, okay? And it kept on going. This is a $3 trillion market cap that gained $500 billion in like just a few days. What did you see that I did not see, as smug or glib as I was on the closing of that day? And what do you think investors saw? Because there's some big money that went into that. And I'll just say this, is like when you think about how much Berkshire Hathaway owns of this stock, like I can't imagine they're buying it. You know what I mean? Like it's just, they're full up. So what did you see, and what do you think investors saw that caused this massive rally on June 11th, for a couple weeks?
No mea culpa needed. This is a developing story over the next 2-3 years. And so we'll see how this ultimately plays out. But what I saw was features that everyone is going to want to use. And ultimately that when they see their friends using these features many times a day, could be 10, 20, hundreds of times a day, you use these AI-powered features in the devices that surround us. And my belief is that people are going to want to upgrade based on that. And ultimately, we still haven't seen them in the wild. And based on the demos that they showed, it looked pretty powerful to me. And I think that my sense is most people are going to see these and say they have to have them.
Mhm.
And I think what it ultimately does is it just kind of accelerates an upgrade cycle from like a 4-year upgrade cycle to a 2-year upgrade cycle. So I kind of see or believe that revenue is going to be increasing, even though it's high single digits. I think it's can be growing even higher, kind of 10, 15%. Kind of hard to believe, kind of when it hits its sweet spot in this next cycle. I'm starting to even just quick thoughts on these features is Samsung has Galaxy AI, and one of their marketing people a couple of weeks ago came out and said that in the first month, so this is in the first month,
Mhm.
that 55% of the people had used a circle to search feature. It's kind of the small feature. So it was once a month. It's not like they're using it 10 times a day, but the ability, people is without any training starting to just kind of gravitate to those. They also said there was an imaging editing AI feature that they said was getting like 25% of people had tried it out. So that's one piece to it. And I think that the real investment in Apple comes to, I think, beyond this cycle. And ultimately, where does the company go beyond a strong hardware upgrade cycle with AI?
Yeah, well, here's the thing. You just mentioned the features, and like going back to the Google conversation when you talk about all the different properties that they have, over a billion, right? When you think about most of those properties, at least in the US, okay, most of those features, at least in the US, are being done on an iOS operating system, right? Like, so think about your Apple, iPhone. I mean, I'm doing it within Gmail. I'm doing it within, Maps. I mean, the list goes on, YouTube and that sort of thing. So what I struggle to understand is that if you're relying on, this new Apple Intelligence that needs to be either on a 15 Pro or a 16 Pro, but you're already getting a lot of this functionality through these Gmail or, through these Google properties. Is it that important to upgrade? I'm not going to upgrade for that, especially if Gemini is kind of going to be, a big part of, how I use an iPhone. So can both of these things be true, Gene?
Yes, I think they can both be true. And I think from Apple's perspective, it's just, I'm not going to do a good job of articulating this, but it's just AI being in the fabric of the products. What you just described is going to Gmail, going to search,
Mm-hmm.
all that's you're jumping into a product and there'll be generative features around it. But to have something where, I'll give one example is to how often I've been frustrated with Apple's inability to find things. And I think the opportunity for them just to say, this is how I'm just looking for anything related to Dan and my conversation over the past 3 months. And it goes through text, it goes through emails, it goes through any other communications we've had. Little things like that. It's just the fabric of the devices. And I think that ultimately is going to really power this upgrade cycle.
Yeah, I guess I'm just not optimistic that that's going to happen in this 16 cycle. You know what I mean? And, for the most part, that search box doesn't work too badly when you put that in. But your point is that if it's going to search across, all your kind of messaging sort of operations, but will it search within WhatsApp? You know what I mean? Like I just, I don't know because we haven't seen the
Right.
demos.
I don't have a good answer to that.
Yeah.
And I suspect uh, that would be difficult.
Yeah, and the last point I'll just make on this is like when you think about their other releases of iOS, I can't think of a single iOS that's caused a massive upgrade cycle based on the features that they've added. They've been massively incremental.
I
So
agree.
yeah, so to me, and I'll just say one last thing, and I'll give you the last word on this because you've been very right. I mean, the stock has gained 15, 16% in what feels like a straight line since June 11th, and that was your call, and it was an epic call. I mean that sincerely when you think about
Appreciate that.
how much, market cap has been gained. But the question I have, has it pulled forward a lot of excitement, which, we may or may not see as they release this new phone in probably mid to late September and it starts shipping, at some point in October, with really the bulk of it coming in November?
I think at the most basic level, where I mentioned kind of the next 2 years and things getting pulled forward, and we'll see, will that acceleration, how big that ultimately plays out to. But at the most basic level, it comes back to what's your conviction in AI? And if you think that generative AI is kind of where we're going and just see some continued revs of generative AI, there's no reason to own Apple. If you think that ultimately we will get to general intelligence and to something beyond, super intelligence. I think that Apple, just given what they do something unique. Samsung tries to do it, Google tries to do it. No one does it like Apple, which is bring all these devices together, bring the software together. That's their marketing line, but it's true. And so my view is that if you believe in AI and believe that Apple maintains its position within hardware, software, services, and you continue to advance that, they're going to find ways to make money. And our whole perception, I remember when Apple hit $1 trillion market cap, and you remember what the conversations were then. This idea, when you take what AI is basically selling knowledge and compressing that. And how much is that worth? That's worth a lot of money. And I think Apple's going to take their fair share of it.
All right, last question on Apple. I need the last question at least, and you're going to get the last word. I think there's about 200 to 300 million iPhones in China, right? And when you think about Apple Intelligence, I cannot imagine that in its form that's going to be sold in Europe and North America, that it will be allowed in China when you think about the firewall. Now, all that being said, we have massive, bans on certain technology as it relates to AI chips to China right now, right? So will the hardware that's sold, have the ability, right, to do some of the processing that's needed to run Apple Intelligence? Now, if we hear some sort of deal between Apple and Baidu, and that's kind of the provider of, let's say, some of this, or Alibaba Cloud and that sort of thing, well, then I could see how Apple's off to the races a little bit, right? When you think about kind of this two-pronged or barbell approach to China and the rest of the world. But again, I just don't think the rollout is going to happen so smoothly in late 2024 and 2025, at least warranting the sort of upgrade that might happen.
China's a big X factor. The lack of commentary about China on the iPhone and in Apple Intelligence was deafening, the lack of commentary. I think there's a high probability that they do a deal with Baidu. I think that high probability is dependent on China not invading Taiwan. If you're curious, we asked the 4 primary models a few weeks ago, would that happen? 2 of the 4 said that would happen, unfortunately. So we'll see how that plays out. But I feel that China's not going to invade Taiwan. I think Apple will do the deal with Baidu. They've worked with Baidu in search in the past. There is precedence there. And if they don't do that, it's going to be a big hit, because no one's going to want to buy an iPhone over there if they can't do this. This is table stakes for having a phone, is having this. And so that's, call it 20% of iPhone sales.
Yeah, no doubt. And that a-hole Bill Ackman on Twitter over the weekend said if he was China, he would invade Taiwan right now. So, Bill Ackman, he is like Nostradamus as it relates to all this stuff. The last thing I'll say on Baidu, it trades at 8.5 times earnings this year, about 8 times next. And earnings and sales growth are expected to be, mid to low single digits. If they do a deal with Apple, this thing is off to the races, right? When you think so. So that'll be really interesting. Okay, last one here. Amazon up 18% year to date. Implied move 4.35%. This reports on August 1st, the same night that Apple reports. This one trading at 37.5 times expected EPS growth, about 22% this year, 33 times next, on 13% EPS growth, with sales expected to grow mid-teens for the next 2 years. Stable margins around 69%. We've spent a lot of time talking about, let's say, Walmart as it relates to, North American retail. And when you think about all the levers with AWS, and you've made this call really well a couple quarters ago, you thought that it was going to bottom at some point at around 12, 13% or so year-over-year growth. That has definitely accelerated. And you think about what's gone on, at least with margins on the retail, it's not something that people want to focus on a great deal, especially when you think about what's going on with AWS. And I just mentioned that investment in Anthropic, and I'm sure that, generative AI will be very helpful in a lot of different parts of their business, but also when you think about the small to medium-sized businesses that rely on AWS, adding those features is going to be something very attractive. Again, they're going to be competing, as they always have been, with Google Cloud and Microsoft Azure, but it looks like it's going to be an arms race between the three of them.
It's an arms race. I put Amazon squarely number 1 in terms of market share, and number 3 in terms of quality of their product. I just think that what Microsoft and what Google are doing when it comes to cloud services is much more advanced. And what that means is that they are doing better at these, adding these models, these, basically think of it as kind of off-the-shelf models that are AI. As you're a developer, you can just build things faster if you're working on AWS and Azure Azure and Google Cloud versus AWS. And so I do expect an acceleration. It was 17% last quarter. AWS, it was growing kind of mid 20s, 30%, and it bottomed at 12%, kind of continue to see improvement growth because I believe that they will continue to benefit from that. And for me, the conversation around Amazon comes back to retail. And is there going to be an opportunity to use some of these tools to improve profitability? They did kill their, I think it was called Scout division a few years ago. These are these robots that kind of roamed around urban areas and would deliver boxes. Now it's just bikes in New York. I'm sure you've seen them. And they're just
All
these
over the place.
bikes is how they're doing it. But there is an opportunity for, this is the showstopper for Amazon's margins actually to improve longer term. And I don't know when that's going to happen, but to me, that's where the conversation, AWS is going to be the focus. Don't get me wrong, but I'm more curious at how their retail business margins evolve with the benefit of some automation.
Yeah, no, that's a great point. I want to hit this. This is kind of interesting. This is from Goldman Sachs head of equity research, Jim Cavello. This came out, I think, last week or so. I talked about it with Deirdre Bosa last week on the pod here, but I just want to read this quote to you. So I'd love to talk about where we are kind of in the hype cycle here as it relates to generative AI. I know we started this conversation where you said there are going to be some big sell-offs here, you know what I mean, along the way. You can be very bullish on this whole theme, you know what I mean, near term, long term, but we're still going to have some volatility. But I thought this was interesting because I'm sure that Goldman, and I know there's a firewall, wink, wink, between investment banking and equity research here, but Jim Cavello's statement was this: currently, AI has shown the most promise in making existing processes like coding more efficient, although estimates even of these efficiency improvements have declined, and the cost of utilizing the technology to solve tasks in a much higher than existing methods. For example, we found that AI can update historical data in our company models more quickly than doing so manually, but at 6 times the cost. So I thought that was really interesting. Now, you and I, we know, okay, as these models get better, right, they're going to figure out ways to be more efficient. And then if you get greater scale, that cost is going to come down considerably. But when I put this comment together about Goldman and how they're using it internally, the one about Chevron, I think what I'm most interested to hear over the next few quarters is how all of the different companies in different verticals away from tech are using this technology to get better productivity and cut costs.
I think that's going to take some time, and easy to say we're going to add these features in, hard to do, and you've given some great examples about that. And so I really welcomed, applauded that piece from Goldman. I thought it was just helpful for over AI, just to have somebody say, basically, let's tap the brakes a little bit here on this. And so my sense is that we're going to start to see some of that benefit to broader companies, probably in some in 25, 26, 27, but it's coming. And even though I just said I applaud them tapping the brakes, I'm all in on AI. I think that we just talked about the ability to productize knowledge is something that is a massive opportunity. And I think that ultimately is that how we use generative AI today is going to be relatively insignificant versus how we're going to use general intelligence in the future. And so I think all companies still think we're in a 3 to 5 year third inning of a 3 to 5 year bull market, and that's going to end in a spectacular bubble burst.
Yeah, no doubt. But let's talk about one of the names that might burst. It probably never gets to the public markets. This would be OpenAI. I think trailing about $1 billion in revenue. 85 billion was the last private market raise, right? So you can do the math on that. I think they're expected to maybe grow sales in the next year or so to 2.5 billion or something like that. And again, what's interesting to me, you just mentioned that they're going to build a search product. They've indicated that they're probably building a number of other products, but even a Microsoft, right, that's invested 13 billion in this technology. And I know there's Azure credits and the like here or whatever, but they're already building competing technology, right? When you think about it, right? And you mentioned TPUs, like all these big, platform companies are going to be doing that. And so I think there's risk to some of these early winners, and I'll throw NVIDIA in there too. At some point, like every one of NVIDIA's customers is trying to build a competitive product, right, to NVIDIA's. And so I don't know, it's just kind of interesting. And I guess, that's more of a statement, but I'd love to know what you think is some of these companies, and you think the massive amounts of capital that are being thrown at them in the private markets, how would you see the IPO window reopening, right? And some of these things that are way, way, way pre-earnings, right? But let's say their revenues, their price to sales is going to be 50 plus or so. What would that do to what's already happening in the public markets? Because it almost makes me feel like we could be in a second half 2021 period where, things got really giddy. That was the SPAC thing. I mean, there was nothing that you couldn't bring to market at that point. So I'm just curious, because maybe we get through this whole period and we don't have any big IPOs in the generative AI, not in the next, 6 months to a year.
So Deepwater, we have about half of our assets are in public, about half in private. So we're close to what's going on in the private space. What's going on in private and software right now is exciting. What's going on in the public space is pretty boring. And I think that these AI first companies, OpenAI is one of them. I think we're going to start to see IPOs in 25, 26, 27. I think that they will help pull the market higher. And so one thought just about, well, it's easy to say that, like, what's the substance beyond that? If we rewound the clock to 1995 and we looked at the internet and said, this is the basic concepts of the internet, what businesses could be created from it? We would have easily identified the concept of social media, messaging back and forth. That would have been something. The concept of video could have been Netflix. We could have figured all of that out. But the concept of search being a trillion-dollar business, trillion-dollar valuation business, that concept would probably been impossible in 1995 to have figured this out. And I think that we're going to see that happen in the AI software space, that these companies that I can't put a finger on it, but I can say that it's more powerful than the internet. Therefore, I think that we're going to see some transformation and value creation that we haven't seen for the past 25 years.
Yeah, well, no, that's a great way to end this thing, because again, I think a lot of folks, were as bullish about the potential for the internet in that whole bubble in the late 90s, but they kind of lost their vibe a little bit from the highs in 2000 to the lows in 2002. And we saw many of the kind of most promised stock, even like an Amazon, lost 85% of its equity market value, you know what I mean, from that period.
Crazy.
No, and now we have nearly a $2 trillion market cap company, and the list goes on and on, but there's plenty that never really realized that promise, and, dozens, if not hundreds, went out of business. So this one is probably not going to be too different on many fronts. I think the amount of capital that just is burned up over the next couple of years with a lot of these companies going out of it. Yeah, it's going to be spectacular, but maybe on a percentage basis, it's not going to be too different than the early 2000s. All right, Gene, I got a lot smarter. I hope our listener got a lot smarter going through the superb 6 here. We appreciate it. Hopefully you come back before NVIDIA, because that one's going to be a whole heck of a lot of fun.
Let's do it. Thanks again, and we'll see you around.
All right, Gene, thanks so much.